Good afternoon from Los Angeles and welcome to Stock Market Today, sponsored by Interactive Brokers. Now on today's show, we're going to be taking a look at the charts of JPMorgan, Carvana, and Burlington Stores. Some interesting action there, but first, let's break down the action of those major indexes. It's Alyssa Corum here with Ed Carson. And Ed, a pretty ugly day today. The NASDAQ finishing down about 1.5%. The hardest hit, the Russell also hit hard too, but breaking below that 50-day. Talk about impeachment now kind of on the front burner right now. So tell us a little bit about what you are seeing.
Yeah, we don't have to get too much into it. It seems like there is going to be a formal impeachment process. But, the key is what is the market, how is the market reacting to the news? Who knows how those proceedings are going to go? But, don't try to guess how the market's going to react to that. The NASDAQ coming through the 50-day, that's not a very good sign. A lot of breakouts are struggling. Growth stocks that might have been bouncing back a little bit, in the last couple of weeks, well, they lost a lot of those gains today. And other growth stocks that never bounced back, they're just hitting new lows. So it was not a pleasant day to be in the market. A lot of things not doing very well. Yeah,
that's right. The market does not like uncertainty, so that's what we are seeing right now. And with the NASDAQ below the 50-day, this is exactly why we follow the market's lead. We look at those technicals and we follow rules, because this was a line in the sand, essentially, that we had been watching, and now we are seeing quite a bit of weakness, but we'll take a look at some individual names. All right, and starting with JPMorgan, that's where we are going to be looking first, and it fell about 1.3% today, back towards a buy point, and we had seen financials come back to life a little bit more recently with this recent breakout with JPMorgan, but it's now back to testing the buy point.
Yeah, and it's doing better than most. A lot of them have come below the buy point, like Ally Financial or other stocks like Goldman that never made it there. But the thing is, you can see how the stock just sort of ran up from the bottom. That's because Treasury yields skyrocketed. They went from about 1.45% to 1.9% in just a matter of a few weeks. Well, the Treasury yields are down, and financials are once again coming back on that. So, that's just an issue. It seemed unlikely. It's just like financials have trouble outperforming in the long run, and one reason is because of situations like this.
Yes, that's exactly right. We will keep tabs on that sector. But let's talk about Carvana, because speaking of how growth stocks are doing, this is one that we had been keeping quite close tabs on, and it is now in definitive sell territory.
Yeah, going through the 50-day line and going beyond the 7 to 8% drop below the official buy point, those are pretty much, that kills that. It broke out in early August. It was a nice moves for a while, but it just, it started to fade. As the growth stock struggled, it struggled to hold on. It came below the buy point. You could have said, I'm just going to get out because things aren't great. But today, absolutely definitive. It's just tough. If there's no profits, it's growing fast, but that's not particularly in favor. And honestly, when the market's going down, not much is in favor.
Yeah, exactly, because we know the vast majority of stocks are going to move in the same direction. That's why we like to not only time our buys with the chart patterns, but looking at the overall market as well, what we're seeing there. But last but not least, let's take a look at Burlington Stores. It was able to gain about 1.7% for the day, so bucking the weakness here. And we've seen quite a number of retailers generally doing well, but Burlington holding its gains here above the 200 level after a powerful earnings gap not too long ago.
Yeah, not too long ago, and it held up. Dollar General, which was stock of the day yesterday, looks a lot like this. Earnings gap up and then consolidating. It's not long enough to be a base, though. If it got above that, high, 10 cents above the high, aggressive investor could probably take a taste. But obviously knowing how the market is overall. But Walmart was up today, so that a lot of specialty discounters and discounters of all sizes fared relatively well. Because consumers are doing okay. You figure people are still going to buy clothes, and if you're going to buy clothes, buy them cheap, maybe.
Yep.
But it's a tough situation.
Yeah. That's right. So we're definitely following the market's lead here. And Justin and I actually this week talk further into detail on the technicals that we are seeing broadly in this week's Investing Strategies video. So you can head to investors.com/investing strategies for that. He and I also take a look at the charts of 2 growth stocks. And actually, maybe we had a little bit of a premonition here, but we talked about how you're supposed to handle a recent breakout when a stock does start testing the buy point and start seeing some weakness. So that could definitely come in handy right now. And we also share IBD's tips for trading ETFs. So for that and more, make sure to check that out. But that is it for today, and we will see you right back here tomorrow, everyone.